We upgrade our base case New York silver price forecast for 2024 up 12% and 2025 up 19% to $29 an ounce and $31 an ounce, respectively. Next excerpt: to the extent the Fed proceeds with insurance cuts and growth stays strong in second half of 24, we could see XAU, XAG, so the gold silver spread, push lower to 70 times.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and in today's market rundown, we're going to look at one bank's $30 silver price target and how insane that is. Look at why China is selling gold. You heard it right, selling gold. And give a quick overview of the Silver Institute report. First, let's look at the markets. The dollar is down 22 at 105.89. The 10-year is 458, basically flat. SP 500 is 50.37, up 17 handles. The VIX is 17.84, down 38 basis points. Gold is 23.82, up 22.60. Silver is 28.43, up 22 cents. We know why this is happening now. Copper is up 8 cents at 4.39. Oil is down 69 cents at 82.40. Natural gas is 172. Bitcoin is 62,800, up 15.70. Ethereum is 30.58, up 72. And platinum, palladium are both up a little bit at 10.27 and 940.97. Grains are, as always, mixed. Soybeans are down 7 cents at 11.41. Corn is 4.23, down almost 2 cents, and wheat is unchanged bid at 548.30. Excuse me, it is allergy season for me, so I'll be muting myself while I sniffle. Okay, there's the homepage. This I thought was an interesting article written by Michael Every. That's my title there. His title was much different than mine. But anyway, that's a pretty good article. What was forbidden is now predicted. We're going to talk about that today. I sent it out to founders last night. They gave it an early look. And yesterday, the Silver Institute report showed 184 million ounce deficit, as pointed out by Chris Marcus, or Arcadia Economics. And we're going to talk about that in a very cursory way. I'm going to give everyone some homework on that, if they're willing to do it. All right, first story. Preview premium. Citibank loves the silver. This is an excerpt from a report which we have attached for premium readers at the bottom. And it goes like this. We upgrade our base case New York silver price forecast for 2024 up 12% and 2025 up 19% to $29 an ounce and $31 an ounce, respectively. It goes on. Next excerpt: to the extent the Fed proceeds with insurance cuts and growth stays strong in second half of 24, we could see XAU, XAG, so the gold silver spread, push lower to 70 times. It's currently at, you can see it on your screen there, it's currently at 83 and change. Those two prices I added there, that's the price of silver in China, in Shanghai, 31.86. versus the price in New York, 28.47, at least when I wrote this down. Gold was 24.20 in Shanghai, and it's 23.80 in New York. Okay, there's a lot of things that I can read into this, but I'm just reading that to you right now, and I'm just going to say that this is not a ruse. This is not a bank that's trying to get you to hold their bags, although you may hold bags, but it won't be from the bank. This is a bullion bank with customer business. And the customer says silver's going up, I'm buying silver. So the bank is reacting to the customer. The customer is always right. Now, they go into some detail as to why they think it's going up, and their explanation, I think, is it's a cautionary tale because they're not as sure as they are of gold, but it's very frank and very honest. And I'm going to put it to you this way. They're talking about the New York price of silver. They're not talking about the China price of silver. They know that these prices are going to converge. So we're already trading $30, folks. Okay. If you take the average of 31.86 and 28.47, divide by 2, you get, I don't know, 9.0. Well, you probably get $30 and change. I'll look at it later on. But that's the point. The point is, that's the New York price. That's the China price. Those are the two biggest venues. Average their price, and that's the price. The U.S. is the bid. China is the offer, right? And if you want to sell it in the U.S., you hit the bid. If you want to buy it, you buy it in China on the offer. Okay? Americans are selling, hitting the bid. Chinese are buying, lifting the offer. That's how markets work. All right. The mysterious China is selling gold. Okay, it's a little bit of a bait title. Yes, China is selling gold to itself. China will issue a set of commemorative coins on April 22nd to mark the 1000th anniversary of the world's first paper currency issued in the country. The set features 2 gold coins and 1 silver coin with face values of 2,000 yuan, 100 yuan, and 10 yuan, respectively. The source is People's Daily China. Here's a couple pictures of the coins. All right, that's the face of one. I think that's the art that's on one. It's not the coin. I think the coin's going to be round. I'm not sure. There's the back. That's one of the coins, right? I don't know where that whole rainbow thing comes in, but and there's the silver coin. So these are probably going to be very attractive, and it's more internal marketing, okay? The irony or the paradox of this all is China is celebrating the invention of paper currency, which you can argue that they did invent it 1,000 years ago by putting out gold and silver coins. 2024 is the tombstone for paper fiat money. Anyway, I think it's just kind of very cool. Second piece, or third piece, I should say. Silver Institute report came out yesterday. Now, I haven't looked at it in detail, and some people already have been looking at it or drilling down on it. One of them was Chris Marcus, and he talked about the demand deficit of about 182 million ounces. I forget what it was. But anyway, the demand deficit was smaller than you would think. So I'm just going to lay some things out there from an analyst to his other analyst buddies. Here's how you look at reports like that. If you want to do some homework on what to believe and what not to believe, look for revisions in demand and supply. Number one, if past demand is higher than previously estimated, they're cooking the books. If future demand is higher, that's a push out from the present. Okay. If present demand is lower, see future demand. Future mine supply is higher, that's hopes and prayers. Take it in aggregate, I'm going to tell you how to look at this stuff. It's like dealing with a 4-year-old child. The present is denial. The past is rationalization. The future is being honest. So, we don't have enough silver. Well, let's kick it down the road. Let's kick the demand down the road, and we'll just keep saying that it's not coming in. It's not coming in because this is silver. It's not food. So you can always delay it by leasing it out. That's why the lease rates are going to keep going up because they're kicking the demand down the road. Okay. When you when you raise previous demand, well, that's, chickens coming home to roost. The present never happens for people that write reports like these when their estimates are wrong. It's really not unlike what's going on at the Department of Labor. the numbers are not as good as they could be. Now, I'm not saying that their report is bad, but as an analyst, I look at things like that. I look at the things that Chris pointed out, and then I start to look at the revisions. I look for patterns. Okay, if a coin lands on heads 1,000 times in a row, meaning if they keep revising data one way, well, something's wrong with the coin, right? Okay, so there's your homework. If you wanna look into that, I'll look into it myself, but I've already made up my mind, right? Okay, market news. This news in aggregate, nothing. Well, we're not having a recession for services. Everyone's still buying airline tickets, right? Chip stocks are dropping, right? But Micron Technology is getting money from the government to build more facilities to make chips. Okay, so the economy is, is strong, just not in traditional ways. And the thing is, Kathy Wood, when the monorail is built in a town and it crashes, you go to the next town and build a monorail. That's all I'm saying about that. Okay, data on deck today is jobless claims. That happens every week, right? At the bottom, premium, Citi's target raise analysis. Citi's target raise analysis. And we have some personal, not personal, I'd say some institutional level contextual analysis on this report. It's a very brief report because it's basically an excerpt of another report we don't have information on. I'll tell you, Citibank is usually reticent on stuff like this, and I think they're getting ahead of a bigger trend. Anyway, also we do handicap it as is it bullish, bearish, short term, medium term, long term, and that's all there. I'm Vince. Let's look at a chart, right? Here's see this here? That's a buyer. Well, of course it's a buyer. It's going up. No, it's a particular type of buyer. That's an algorithmic buyer. It's even within the algorithm, there's an algorithmic buyer who's finishing his order. It tops off like that. And the market will eat it. In a bear market, it spikes higher and then fails miserably. In a bull market, it spikes higher and stops. Could be a small spike. Spikes higher and stops and then launches later on. I showed you the last time we had one of those. You'll be like, oh, that's scary. Algo. Buyer, spikes higher, launches. Am I saying that's going to happen now? No, that's a daily chart. On an hourly chart, it happens. Right? Also works in the other way. Yesterday, I talked a lot about this line. I said it wasn't that important. Well, it turns out it was. Look, a break on this line like this, that's significant. It's significant for a trade. You're short below this line. Boom, right? And now whoever's short is covering or maybe adding. The one thing I was wrong about was I thought silver would crack before gold because the line was less steep. Well, I was wrong. Silver is holding its own against gold, and that's probably because banks are now seeing clients put money into silver. Macro funds that have been buying gold are looking at silver saying, I'll put a little money in that. Okay, it's like put a little money on the hard eight. Not to make it meaning it's a bad bet, but just to say you're making money, you're parlaying, you book some profits in one, and you buy the undervalued asset. That's it. I'm Vince. Have a great day.
Thanks for watching this morning's Markets and Metals Update with Vince Lanci. Brought to you each day by Miles Franklin Precious Metals, where this week's special is junk silver for only $2.75 over spot. Junk silver is the pre-1965 dimes and quarters, and one of the products where we did see premium spike in the past couple of years. So you can find out more by calling us at 833-326-4653 or emailing arcadia@milesfranklin.com. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.